When SpaceX counts down to a rocket launch, the whole world watches. It's happening again, but this time, it's a different kind of countdown, one that could move markets, and traders are paying close attention. Meet Elon Musk's SpaceX, which is expected to launch its public offering on the Nasdaq later this June. Some reports suggest a valuation of around $1.75 trillion. Yes, trillion. And if that holds, it could become one of the largest IPOs in history. Some analysts are already questioning whether the price is too aggressive. For traders, one big question remains. What does this mean for the markets? But first, let's cover the basics. What is an IPO? An initial public offering, IPO for short, is when a private company offers shares to the public for the first time. Until now, SpaceX has been private, with access limited to select investors. But if this listing happens, the doors could open to public market participation. Early reports suggest around 555 million shares could be offered, priced at approximately $135 each on the Nasdaq. What's driving the $1.75 trillion valuation? First, Starlink, SpaceX's satellite internet network, is expanding into enterprise and government markets, becoming a major revenue driver. Second, reusable rocket technology is reducing launch costs, improving margins, and strengthening its competitive edge. Third, government and defense contracts provide steady, long-term cash flow. And finally, the AI angle, combining XAI with satellite infrastructure, could position SpaceX at the center of future data and computing networks. So, what could this mean for traders? Some reports suggest the Nasdaq may allow faster index inclusion, potentially enabling a company like SpaceX to join the Nasdaq 100 shortly after listing. Typically, this process can take months. Here's why that matters. Trillions of dollars are tied to index funds and ETFs that track the Nasdaq 100. If SpaceX is added, those funds may be required to buy in, driving demand, volume, and price momentum. That's the kind of setup that puts a new listing firmly on every trader's radar. Let's break it down. When a company of this size goes public, volatility is often elevated, especially in the early days of trading. There can also be ripple effects across related sectors like aerospace, AI, and satellite technology, with traders watching closely for potential spillover moves. For traders who understand the dynamics, this kind of environment can create opportunities in either direction, whether the market rallies, pulls back, or swings both ways. That said, it's important to keep this in mind. IPO participation can vary depending on the broker, and once shares are listed, public investors may have limited influence. You might be wondering, how do you approach something like this? Well, the good news is, you don't necessarily need to buy the stock itself to get involved. Some traders use CFDs, contracts for difference, which allow you to trade price movements without owning the underlying asset. For example, the Nasdaq 100 CFD gives exposure to the broader index that SpaceX could potentially join. So, what is the takeaway? A potential SpaceX IPO could reshape the Nasdaq, trigger passive fund flows, and drive volatility across multiple sectors. Whether you're watching from the sidelines or actively trading, understanding the bigger picture puts you one step ahead. Keep learning, stay informed. If you're ready, explore the markets through the FXGT platform and see what opportunities lie ahead. The countdown begins.
FXGT, where traditional meets digital.